Hey, good morning to those of you out there on the West Coast. Good afternoon to those of you here on the East Coast. It is a beautiful Friday, and I'm excited to uh, kind of finish up my day and go have a little fun in the sun. But I'm happy that you're here with me, and I'm excited to talk about setting goals and really trying to understand goals more. But we're going to dive into how to set and achieve goals in the federal market. And so before we get too far started on this, I just want you to think about this, right? You don't have to necessarily, actually, you can answer yes or no in the question in the chat, but really, I just want you to think about this, right? Do you have a revenue goal set for 2023 that you're aiming for? How much money are you trying to recognize in 2023 that the federal, commercial customers, whoever, how much are you expecting to get in 2023? What about 2024? Do you have that already set? Right. I work with customers where we have 5-year plans and we know exactly what the revenue goals are for the next 5 years out. Right. If we have a really good up year, we might adjust it a little bit. But you're looking out and you're saying, this is what I'm looking for. I'm working with a customer right now that is looking to go from 10 to 40. And it's like, okay, here's the path to get to that 40 within 5 years. And so I want to make sure you have a goal in mind, because if you don't have a goal in mind, in this case, a revenue goal, then how on earth could any kind of mapping and planning out get you to the goal if you don't know what it is? The second thing I really want you to understand, and what we're going to talk about today's training, is that you can achieve those goals you set. It's just a matter of understanding the goal and then reverse engineering that the numbers back. And I'm going to show you how to do that today. Go down deep into diving into the numbers. But when you do that, you're going to be able to plan out your success. You can have the success you want just by knowing the path to get to the goal that you have set for yourself. Your success, if you've heard me say this once or 1,000 times, I like to say process should be giving you predictable, repeatable results. And your success should be the same thing. It should be predictable. You should be able to look out at the end of 2023, certainly at the end of 2024 with all this training I do on setting a goal and predicting that success for you and your company. And so I'm excited about it. That's what we're going to talk about today. If you don't know who I am, my name is Neil McDonnell. I'm the president of the GovCon Chamber of Commerce, and I want to welcome you to my federal sales training, where I provide tips for success in the federal market. I spent 20 years as a small business owner in the federal market, and since 2018, I've been teaching people like you that government contracting is not a secret. It's just a process. And like I said, a process goes from A to Z. And when you follow that process, you get repeatable, predictable results. And that's what I want for you. And today, I want you to have repeatable, predictable revenue success. If you haven't done this already, do me a favor, put your company name, your core competency into the chat. Let others know who you are. Let me know that you're here and what you sell. So that way, when I'm out there interacting with different people, I can make introductions. I just got on a call today with somebody who's been watching our training. And I was able to quickly introduce them, not actually one of my customers I could introduce to them, but also I could introduce this person to somebody who can solve their challenges, right? And by knowing what each of these people do, I'm able to make introductions, and I'm happy to do them when they just pop up, right? And I want you to be able to get that same benefit from me or from anybody else who's in the community. If you're open to connecting on LinkedIn, definitely tell us that. And then finally, thank you to the sustaining members of the GovCon Chamber of Commerce. We're self-funded. We're funded by people like you and me, not the government or large primes. And you make this training possible for small businesses all across the country. And I really want to just say thank you on their behalf. Thanks for being part of the sustaining membership. Okay, so this slide, I had planned on making it all animated, and it just occurred to me I did not, but that's okay. We're going to deal with it. I want to walk you through some baseline numbers, because I'm going to show you how to establish your own as you go forward. But let's start setting some baseline numbers. So if I start working on your 2024 numbers, I need to start with 2023. How much revenue did we make in 2023? Or how much are we expecting to have in 2023? And what I'm saying here for our example is 10 million. So imagine our company, we all belong to the same company, ABC company. Our company is going to make 10 million. We know it's making 10 million in revenue in 2023. As you come down, the next line here, bullet, is the revenue goal for 2024. What is our goal for next year? Well, we all said, hey, we're $10 million this year. So for 2024, our revenue goal is $15 million. We want to have a 15 or 50% growth to $15 million in revenue. So if you look at this, and I know if you're listening, you can't hear it or see it, so I'll just walk you through it. But if you look at the revenue goal for 2024, 15 million, we expect that $10 million that we had either won or already had in 2023, what I'm calling revenue under contract, right? You could think of it like option years going forward. Revenue under contract in 2023 that's going to go to 2024 is $10 million. And what that means is that I need new revenue of $5 million going into 2024, not $15 million. Our goal is $15 million in revenue for 2024, but I only need $5 million more, $5 new million, because $10 million is going to carry forward, right, under contract. Hopefully that makes sense as we move forward and you're following through with me. So the top section that I was describing are revenue goals, understanding it as recognized revenue, money in your pocket, right? I don't count revenue any other way than in my bank account. If it's not there, then it's promised at best. And so that's what I mean when I say revenue is revenue recognized coming in. That's different than sales goals, which is going to be the bulk of what we're talking about today. So our sales goal for in order to achieve the $5 million revenue for 2024, you would think maybe we just have a sales goal of $5 million, but that's not the case because most federal contracts are 5-year contracts, right? They're a base plus 4 option years. That's normal for me in the professional services IT world. You put whatever you want, but for company ABC, we win 5-year contracts as the norm. And so that means I'm not going to be able to win a $5 million contract. I need to win a $25 million contract. For example, if I only won one contract, I need to win a $25 million contract that'll give me the $5 million. Now, I can also do this in a whole bunch of varying ways, like a whole bunch of $5 million contracts that give me $1 million each kind of thing. But so most federal contracts are 5 years. And the other thing is the new revenue, the way I'm saying it is if I need $5 million and I times that times the 5-year contract, then that's $25 million. The reason I want you in that to put that in your head is that's our goal. That's what we need to get is $25 million in sales goals. Well, how do we do that? I'm going to walk you through how we do that. But first, I want to talk to you about the stages just to remind you. I talked about this in a whole training yesterday and multiple times this week. These are the sales pipeline stages. An opportunity comes into your pipeline and they come through qualified to pursue, bid, proposal, and then awaiting award with the government, right? That's fundamentally your sales life cycle. And the reason I'm pointing this out is because the gate process, if you look at it, what it describes are your chances of winning as you move forward is 1 out of 3 or 33% to go from qualified to pursue. And then every other stage, the chances of an opportunity moving forward to the next stage and then going out the door is 50%, 1 out of 2. And the reason for that is because there's always excuses or reasons for no bid. You might no bid something, the government might no bid it or cancel it, et cetera. And so I say 50% of the opportunities that hit pursue will go forward to bid and 50% of bid will go to proposal, et cetera. So hopefully that makes sense. If you want to see more, I did an entire training just on this slide yesterday for a full 30 minutes walking through. So this next green, by the way, is just the percentage of dollars you can count on. We'll come back to that, but just keep it in mind that the green is relating to the red numbers. And I'm going to do it here in a different way. So on this slide, what I'm trying to show you is that the first box at the top is that gate process. When I say you're going through the gate process from qualified to pursue, only 1 out of 3 opportunities will go forward to pursue. So a 33% chance of an opportunity that's in pursue will move forward. And because it's 1 out of 3, only one's moving forward. And then as you look at pursue, bid, and proposal, those are all 50%, like I said. So this is where it starts tying together to the percentage of dollars that you can count as predictable revenue. And so look at this weighted value state by stages. So if 1 out of 3 opportunities is moving forward to pursue, right? The chances of that one opportunity getting all the way to proposal is not there. So you need a lot more opportunities in qualified in order to go to pursue and then bid and then proposal. And when you do that, I lay out this percentage bar here where I'm saying that if you have $100 in qualified, only $1 of it can be predicted revenue at the other end based on the percentages of moving forward. If you have an opportunity, it's a $100 opportunity in pursue, where the value of pursued opportunities is $100, well, you can count on $3. And it's the same thing going all the way forward. And right here, proposal, you can count on, awaiting award, you can count on 25%. And that's because I said 1 out of every 4 opportunities that you submit to the government, 4 proposals that you write and give to the government, you should be able to predict winning 1 out of 4. Yes, you might be able to do less, but that's a good conservative number. If you're higher than that, you need to work on your proposals so that you can get down to this stage. But when you're writing to your core competency, you can win 1 out of 4 proposals. And so that gives you this 25% number that I have. And the way I got the 12%, 6%, et cetera, is, and this gets a little mathy on us, but you just back up from awaiting award to proposal, and you can see that 1 out of 2 opportunities that you were writing a proposal for when it was in this stage, 1 out of 2 will be abandoned by you. You will not move it forward because the pricing wasn't right, or we didn't like this, we didn't like that. Whatever it is, leadership will say, no, let's not submit the proposal, even though you started it. And because of that, now you have, you're reducing the chances of winning by 50%. This all seems, if you're not loving math, it can seem a little confusing on those numbers. But the key to remember is once you have the numbers plugged in, and I'll show you how I plug them into a spreadsheet, you don't have to do anything except for look at your pipeline, add the value, and the value will automatically calculate. So once you plug these numbers in, you no longer have to think about them again, except for once a year, you reevaluate the data to make sure that these 1 out of 2s or 25% are accurate. So let's go to the example I used in the baseline numbers. In the baseline numbers, I said I need $5 million in new revenue, which represents $25 million in sales. And so right here, I'm saying that same thing. In the bottom right, if you look at the actual contract value, I'm going to win this contract. Let's say it's a firm fixed price, $5 million a year. Make it easy, right? Well, that means if I win it this year and it starts sometime before or at January 1st, 2024, then I'll have $5 million for that. And I call that annual contract value, right? And that's different than total contract value. So I might look at an opportunity and it's a 5-year contract for $25 million. Well, that means I divide the $25 million by 5 years, and the expected spend or revenue will be $5 million a year. Hopefully that makes sense, right? So 5-year period of performance times the actual contract value. And so I'm just multiplying the value of it. Okay, the annual contract value. All right, so if you're following that, right, I need $5 million in revenue, I'm coming back. This is the part I really want you to pay attention to now going to the left, because this is where you get into your pipeline. And if you put your numbers in place, you will have predictable success. If you don't do this, you'll be confused on why you're not winning what you need to win. It's because you didn't put numbers in place. And so if I want to win $25 million in total contract value, and I move back just to the proposal, right? This total contract value, that's the win. The government has awarded the contract to me. But I said, if I back up really quick, that I have a 25% chance of winning any awards that I'm awaiting on that I have written a proposal for, right? And so if I have a 25% chance, that means 1 out of 4 proposals that I'm waiting on are going to be a winner. And so right here, the proposal value needs to be $100 million. I need to win $25 million in total contract value. And so the proposals I have out need to be 4 times that. So $100 million. And I'm going to give you guidance on that as well. So $100 million. And so that means if I'm looking at my pipeline and I want to make $5 million and I have nothing else in my pipeline, then I need at least $100 million with 4 different opportunities in the proposal stage. If I have that, then the likelihood of me getting that $5 million revenue is there. Now move to the left again in the pipeline. The stage before proposal, before the RFP drops, is bid. And so if you have an opportunity in the pipeline and it's in bid, remember, just coming back here really quick, bid is a 1 out of 2%. So right here, if it's in bid, 1 out of 2 bid opportunities will move forward. And so that means basically I need twice as many opportunities in bid as I did in proposal. Hopefully that made sense. Let me come back here for a second. So I'm in bid, I'm looking at my pipeline. When I look at the bid value and I know it's 2 times, well, if I need $100 million in proposal value written and sent to the government, then at the bid stage, if I have nothing in proposal and nothing in stages earlier than bid, just in bid, then I need $200 million in value in order to be able to predict the $5 million in annual contract value or revenue, right? And so this bid value is really 2 times the proposal value, right? And so each one, when you look at it, if I'm in the pipeline stage, that pipeline stage needs to be 2 times what I need to have in proposal. And proposal needs to be 4 times what I need to win. And winning the total contract value, the sale, needs to be 5 times the value of the revenue I need to receive annually, or the annual contract value. And again, remember, these numbers, you plug them into a spreadsheet and they're automatic. Or in my pipeline, I use SharePoint for customers I work with and build pipeline tools. And there's calculated fields in there that automatically will show you a dashboard and go, no, you're doing fine. No, you need more, something else in your pipeline. And if you can't move something to bid, you just get more qualified. So right here, you can see if I want $100 million, I need $200 million in value. But right here, it needs to be 8 times the $25 million I want to have for total contract value of the win. And this goes to a guideline that I have, that no opportunity can count for more than the total contract value right here, meaning basically the total win that's out there. So even if it's larger. So for example, say I had an opportunity, and I have this often with customers that are a little bigger. I have opportunities that are 200 million or 400 million, $1 billion. Well, people will leave it in and they'll kind of count all of that dollars. But at that point, then you just need one opportunity moving it forward. And if it wins, right? Well, that's not reality. That's not how it works. First off, because you only win 1 out of 4 proposals you submit. So if you submit a $500 million opportunity or proposal, you're only winning 1 out of 4. So you lose that. What are the other 3, right? And now if all four of the opportunities that are out there are all 200 million and above or something, that's fine. But you can only count them up to $25 million in this scenario. The reason I do this is it makes my predicting or my planning very conservative. If I hit a better batting average, if I win more, then I'm going to have a really good up year, well above our goal in our planning. But if I hit what I'm planning for, I will hit a 50% growth. Remember, I went from 10 million revenue to $15 million revenue. So that's a 50% growth in 1 year. That's a good year. If I hit that, I can hit it this way. And so that first rule is really talking about it. And I'm going to come back and talk in a minute. And then it's funny, I got to change this language because I put the graph down below here. But that total contract value is right here. So just remember that when you're doing your predictions, and I build this into the calculations, you can do that as well. So you never have to think about it once you think the first time. The other thing is you can use these same numbers, but you just do work share. And so this one, just as a quick aside, when I'm looking at these opportunities, every one of them, I'm seeing them as a prime vendor, prime contractor. And so I'm counting the full 25 million. But if the contract value is 25 million for 5 years, but I'm a subcontractor and I get 30%, let's say, then I'm only going to count 30% of that revenue. So 7.5 million or so. So I'll still put into my pipeline that it's a $25 million opportunity. I will put into a field that I use that says 30% work share. That means I get 30% of the business. That means my company can only count on 30% of the revenue or the total contract value. So that would be that 7.5 million. When you build this into your pipeline, the reason this is important, whether you prime or whether you sub, your numbers will start telling you the truth about the revenue you're going to win. If you can win 1 out of every 4 proposals you submit, and you start pushing opportunities through the pipeline the way that you should be doing, then you will have predictable success at the level you want, right? Not unrealistic success. You're not going to go from 10 million to 100 million in 1 year, but there is realistic expectations that you can grow 20 to 50%, let's say, in a year. And so reverse engineering those numbers down these set of arrows is important. So let me show you one more way, and I want to show you how this can look, and I'm going to switch to my other screen and do it there. But in here, it's a way to start looking at how much value do we truly have into our pipeline. And this P-win, by the way, it's that right here, it's this percentage that you can count on. So let me just escape out of this and go in here. If you're not familiar with PowerPoint or other tools, you can put a graph in here and then just edit data by right-clicking on the chart and saying edit data. And I'm going to go in and put some data in here. Hopefully it'll open up for me pretty quickly. So I want to put some data in here that just let me put it over to the left so you can, actually, I'll put it to the right. Let me come over here so you can see that graph a little bit. Okay, so in here, what I have in the pipeline, let me see how far I go. I don't know how much you can see that, but seeing this is less important than seeing the graph. So what I want to do is start putting in opportunities into the pipeline, right? And so up on top, that's calculated weighted value. You can't really see it, but it's basically, I have it calculating it divided by the 1%. So let's say I put in, I'm putting in $10 million of opportunities, right? So now I've got $10 million in there, but because it's weighted the way I told you on how opportunities move through the pipeline, I'm only able to count on $103,000 on $10 million that's in there. That might seem odd, right? But it's really important for you to understand this, because we often might be trying to get $1 million in revenue and think it's enough to put $10 million in. It's not, because at each stage of the pipeline, you're increasing your likelihood of winning, but your likelihood of revenue or winning, right, is 25% at best. If you win 1 out of every 4 opportunities, then really all you can count on is that. And so if I wanted to get higher up there, let's say I really do want to do $1 million. So let's just say that's 100. I don't even know where I'm at. 100 here. There you go. So I'm $100 million. So now I have $100 million, and that has to be many different opportunities, right? But if I have $100 million opportunity, what I'm telling myself is that this row 2 here is how much revenue I can predict coming out. And so that's a lot of money in there. And so let's just do it a little differently, right? So I got 25 million in new opportunities. I haven't done anything with there, but I have some opportunities in pursue. And so let's say we've got 10 million in pursue. I guess that's only $1 million. 10 million in pursue, right? I'm bumping it up to another 300,000. And let's just say in this example for 1 second, I'm just trying to go to actually let's stick with the 1 million, right? So I'm trying to get to 25 million, excuse me. If I do that and I put another 0 on this, and I'm trying to get to $25 million in contract value, that's the number I'm trying to get across the top here. So you can add these together and moving it forward. So here it's the same thing. Let's just put another 100. I think I did 100 there. So now I'm up to the 10 million, but I'm still not quite at that level. And so now I got proposals. I'm just going to throw in another 100. Let me add one more 0 in there. Hopefully this is making sense, right? This idea that so 100 million. So how much money we got here? So 12, 18, looks like a little bit more than 20, but we need 25, right? And so let's just say we've got 20 million out here. So when you do this, and if you look at these numbers, right, I've got 5 here is 10 plus 18 is 28 million. So this pipeline, and let me just close this for 1 second. If you look at this pipeline, because of the ways I did the numbers, and I've been showing you, how if you have these numbers and you weight your opportunities as they go through the pipeline, you will know if you're really going to hit $25 million. So this chart that you're looking at, and the value of this chart, let me see if I can just present it again. The value of this chart is that it is showing me, I use this in my pipeline, I have it off to the side or something, it's automatically calculated. Remember, I don't have to do the math every day or even every month. It automatically happens once I establish the baseline set of numbers over here. But this is showing me that our goal is that we want to win $25 million in contract value. And we currently, with our current pipeline, are aligned to do just that, right? We're aligned to win $25 million in contract, a little bit more actually. But the part I want to show you last is how big, I don't know if you're tracking on this, but how big was the pipeline, right? So let's look at that. That was 25 million I was saying. And so if I just open this up again, 25 million is row 2, but row 3 is where we're really looking, right? So it's 250, 300, 400, 500, and $70 million in the pipeline. I need $500 million in the pipeline in order to predict that I'm going to win $25 million in revenue. Sales, which will get me the $5 million in revenue, right? And so there's a lot here. I know I talked a lot about this stuff as we're going forward on it, but it's really important for you to keep in mind that when you put numbers into your pipeline and truly look at it, then you will absolutely be able to predict the revenue that you're going after. So, hey, in this training, what we talked about today was knowing your baseline numbers. So use mine until you have your own, and then setting goals, establishing the likelihood of opportunities winning and progressing. And that means those two number sets that I gave you back on this other chart here, right? These two numbers over here, make sure you establish your own, and then understanding the total contract value. That 5 billion gets to 25 million in revenue. And so what I want you to do as you go away into the weekend or whenever is really plan to setting your revenue goals for 2024. How much do you want to earn in the bank on 2024? Because that is what you should be selling right now in 2023. So, hey, if you're getting value from my trainings, do me a favor, become a sustaining member and help everybody else benefit from it as well. It's funny, I'm trying to find out where I'm at. There I'm at. And then if you're already making money in the federal government, you're looking to go to the next level and you want some help from me and my team, love to help you. If you're at the right stage, consider joining our BD Accelerator workshop. And remember, government contracting, it is not a secret. It's just a process. I'll see you in the next training.